Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I wanted to answer a question, and I know a lot of people have this question. How will deflation affect uranium, silver, and oil stocks? Normally commodities go down during deflation. What are your thoughts on that? Well, in a deflation, commodities go down. I mean, that's the question you should be asking is, what is the likelihood of a deflation happening? Not if we have a deflation, how do they react? Almost everything goes down in deflation. There's probably only one thing that's good in a deflation. Two things. It'd be cash and bonds that pay something. Because in a deflation, interest rates are going to go down. But I don't think we're in a deflation. I don't think we're even close to a deflation. Deflation is meaning that you're seeing prices go down. We have the exactly the opposite problem going on. We have inflation going up, and we're seeing home prices go up. And if you notice, on my a lot of my thesis is if real estate goes higher, it is inflationary. We're in an expansion phase of real estate. We're seeing inventory get sucked up completely dry. And prices rocketing higher. So you guys have the data right in front of your face, like it is right here. And what people are doing is they're ignoring the data. They're ignoring what they're seeing in real life and going by what they hear on YouTube, which I think right now we have inflation. I mean, that's not even debatable. Just, are you paying more at the pump? Are home prices going up? I mean, the common stuff, guys, just look out there. Do you see deflation or inflation? Now, we can't have deflation. Like, we can have the pressures of it, but then the Federal Reserve is they're gonna stop on the gas pedal and hit it so hard that you won't even know what happened. They're gonna fling us into a hyperinflation at some point. Now, I pulled up an M2 money supply growth. It's right behind me. This is the M2 money supply growth versus inflation. This is the past 80 years. 80 years looking backwards. The red line that's behind me, this guy right here, is the inflation number, that red line. So since all the way going back to 1941, May of 1941, we've had one little small deflation here, and we had one little deflationary spot right here in 09. That's it. In 80 years, we've had two small, teeny little deflations. I would not be worried about deflation. If you look on the right-hand side here, we have a massive spike higher of inflation. And what I think's going on is the Federal Reserve is scared that they pumped the system with too much money and they don't know how to take it back out of it. And remember, there's a psychological effect to deflation and inflation. When inflation starts to be felt, you're going to psychologically change people's minds. And they're going to say, don't hold on to dollars, get rid of them, get rid of them, get rid of them. All of a sudden, the money velocity starts kicking up. There's a huge psychological aspect to this. And I don't think the Fed, if they lose that psychological aspect and they lose control, I don't think they can reel it back in. I think it's going to be a lot more difficult than what they think is going on. And all of the underlying conditions for a market for inflation are underneath us in terms of real estate market and the expansion phase in that real estate market. So I don't know where this deflation is going to come from. A deflation usually comes from declining residential real estate land values. When we had these two, they were from declining residential real estate land values. That's what happened in the crash of 08. What happened was real estate got bumped off its trajectory in housing starts in 06, 07. They started to decline rapidly, and then you had a crash in the stock market later because inflation follows the real estate market, lagged by a year or two. And what we're seeing is the real estate market's taking off, and you're seeing a whole bunch of people on YouTube that apparently don't know how to look at inventory numbers. Or where I get stuck is I don't know where the inventory is going to come from in real estate. And if all deflationary crashes come from real estate, where's the inventory going to come from? They either have to build it, which we haven't built that inventory yet, or it's going to come from somewhere. I don't know where it's going to come from. And the only logical way that I see it, but this is just me, maybe I'm missing something, is I'm seeing it coming from the new homes being built. That's where the new inventory is going to come from. That's my guess. The forbearance, I don't think there's enough homes in there to knock this thing out of its groove. It may slow down the appreciation rate, but it's not going to knock it completely back to a negative number. So I don't know where this deflation will come from if the residential real estate market remains robust. If it doesn't remain robust, then we can see it in the inventory numbers and we can get some heads up on when that occurs. And remember, markets don't go straight up and they don't go straight down. We've got indications, but we have to have all of them turn on. You can't have one or two on a short-term pullback necessarily indicate that something is wrong. What people are doing is they're taking too short of a time frame. So a lot of these guys, oh my God, the 10-year yield, it's going down. And then they give you this face like, one of those stupid faces that they put on their YouTube thumbnail. I don't like those faces, sorry. But the pullback here of inventory, I just don't see it. And the pullback in 10-year yields, it's probably just a short-term little blip versus a long-term structural change. And we broke out of absolutely everything. There isn't a single metric that I can find that is saying that deflation is coming outside of the 10-year yield going down on the very short-term basis. And short-term things don't necessarily mean that you have a big structural move. I think we're going to see far higher rates, yields, that is, interest rates, yields. We're going to see far higher inflation. And every single chart that I throw up on this channel, you guys are if you're a deflationist and you've watched those videos, I don't know how you're going to negate those charts. And what I mean by those charts, copper to gold ratio, platinum to gold ratio, gold going higher, silver going higher, platinum going higher, the emerging markets going higher, EWA, EWZ, you've got all of the overvaluations in absolutely all the other sectors, signaling that the money's already flowed in during a different cycle. So we've got all these things putting in decade-long plus patterned chart bottoms. To say that deflation is coming, you are negating all of those charts and what everyone thinks in the market on those major components. You're saying that the whole commodity sector is wrong, that the gold sector is going to go up here soon, I think, too. Gold, silver, all of them. They're all going to go. And it's going to be, I think, a very big move because of the thing behind me. This inflation rate is just starting to come up. And the next few numbers, watch the Federal Reserve. If they start getting nervous, you know that they know the numbers and they haven't reported it yet because it's probably going to be a big move higher in inflation, which means massive real negative rates. And if people get scared psychologically, if they get turned or scared, that money's going to rotate fast. And you better be in this stuff before that money rotates. And that's why I'm sitting here on the channel, giving you guys all this information, looking at the charts, and that rotation can happen quite quickly if people's psychological, paradigm rotates. And they say, crap, inflation's coming, it's big, rotate money at now. And all of a sudden, you'll start seeing stocks come under pressure. You're going to start seeing yields go higher, and you're going to see money rotate into commodities and precious metals. That's my guess. So I don't know where the deflation is necessarily going to come from. That means residential real estate has to go down, and all of the metrics in the residential real estate market are on fire. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.